Welcome back to the channel. I'm Scarlett from Miss Money, and we're getting right to it today, and I'll explain how Palantir is the next trillion-dollar company. Palantir was just selected for the government's SAFER project, worth $89.9 million. We'll get into why this is just the beta phase for Palantir. This stock is incredibly undervalued and has the potential to grow 10x. But before we dive into the juicy details, real quick, join our money fam and subscribe to the channel, and let's go. First off, this SAFER project, Palantir was selected by the National Nuclear Security Administration for data-driven decision-making. This agreement was valued at $89.9 million for up to 5 years. This is a huge deal for Palantir, as it's the company's first contract with the NNSA serving for its safety analytics, forecasting, and evaluation reporting. If you don't know already, Palantir has really landed some great contracts already, and this is a great ad. As it fell just below $24 per share, I averaged down personally and added 1,200 more shares of Palantir to my portfolio. Palantir will only skyrocket from here. This is why I believe Palantir landed the contract and will continue to lock down many more. First off, the data integration provided by Palantir is impeccable, and its granular security model is perfect for NNSA to work all along its sites. Security is obviously very important for the NNSA, and it's also important for many other companies in our digital world. It's also important for every government entity. The US spent $686 billion on national defense during fiscal year 2019, according to the Office of Management and Budget, which this amounts to 15% of the federal budget overall. Palantir signed a multi-year, multi-million contract with PG&E to create a digital twin for enhanced safety and grid reliability. PG&E collects 8 to 10 billion data points every day and is using Foundry to build a digital twin of its entire network. Additionally, Palantir landed an expansion with a Fortune 50 healthcare company to manage their contracts. Here's the thing. Palantir is incredibly valuable because every business needs deep data analyses, especially in this day and age. There's no doubt in my mind that Palantir is so valuable because how they can help all companies. Companies need to invest in services to visualize their data and make use of it now, not later. Palantir has an opportunity over the next few years or so to really take over this industry. Getting into those juicy financial details, I want to talk about their 2020 Q4 results. So, $1.1 billion in revenue for full year 2020. This is up 47% year over year. It's no wonder Cathie Wood is a fan of this stock. This company has grown so quickly, and it's only going up from here. For full year 2021, Palantir said it expects revenue growth of 30%, slowing down from 2020's 47% growth. So as you can see, this is probably why we saw that dip from February 19th to the 25th, as the stock fell 17%. This announcement of Q4 results had people a little bearish, so it went down. I could go on and on about this company. Palantir offers a couple of services such as Gotham for governments, Foundry for corporate clients, and Apollo, a continuous delivery system that manages and deploys Palantir Gotham and Foundry. Securing government contracts is a great way of securing long-term revenue and lets the company on other areas it wishes to expand. Palantir recently announced it has partnered up with Amazon Web Services. This is huge, guys. As mentioned, the company had a pretty good year with 47% year-over-year revenue growth for full year 2020 and expects that growth to be bigger than 30% for 2021. Data is slowly becoming the most valuable commodity on the planet, and Palantir is exactly where it needs to be to take advantage of that. Data collecting and analyzing isn't going to slow down in the years to come. It's only going to accelerate, and that's why Palantir is going to win and win big. Palantir's revenue from government customers rose 73% year over year to $420.3 million, or 55% of its top line in the first 9 months of 2020. During the third quarter, it secured a new AI contract with the US Army. Last December, the U.S. Army renewed the second year of a 4-year analytics partnership, which provided for 1 base year and 3 optional years with Palantir. That same month, the Food and Drug Administration, which already uses some of Gotham's tools, awarded Palantir a new 3-year contract to track the development of new drugs. In January, the U.S. Army hired Palantir to modernize its ground stations. This contract, which will start with a prototype and expand over 4 phases, could be worth up to $250 million. These contracts all indicate Gotham is sticky and will allow Palantir to deploy additional services to boost its average revenue per customer and widen its moat against its potential challenges. Palantir also has a great AI angle. It's a great artificial intelligence play. The global AI market could still grow at a compound annual growth rate of 42.2% between 2020 and 2027, according to Grandview Research, as AI tools are increasingly used to process data across a wide range of industries. That secular trend will light a fire under companies like Palantir that process large amounts of data into actionable strategies. Those tailwinds could help Palantir generate high double-digit sales growth over the next decade and help its stock grow into its premium valuation. Palantir stock has had a solid run since last November, rising from levels of $10 to around $25. Kathy Wood is a fan of this stock, and so am I. This is a buy. In the short term, I'm looking at a high target price of $40 per share. But for the long term, there's no doubt we'll see this undervalued stock rise 10x. So hang in there, add more shares to your portfolio, average down here while this price is a little bit lower than usual, and let's get in it, guys. Let's get into this ride before the skyrocket begins. That's all the time I have for today. I'm Scarlett from Miss Money, and catch me next time.